All right, Matt, got some other really good, interesting pieces. The next one, which I think dovetails really well, and I think it talks about a lot of the underlying forces of rent growth, what we're talking about in demand, is this piece from the Harvard Joint Center for Housing Studies.
Yeah, this was a really nice one, and I was really glad to see it. It's an important one because it deals with a metric that sits pretty close to the heart of housing demand, which is household formation, or as they are measuring it here, household growth, which is the number of new households that form each year in the United States. Maybe it comes from people moving out of their parents' home, maybe a new family immigrants into the country, or maybe a struggling grunge band finally gets a record deal and they're able to each get their own place.
I think that's what most of it is from.
Yeah, they're sharing apartments, and now they signed a Sub Pop, and now they're finally successful.
Sweet.
That's just an example, but more seriously, household formation is particularly relevant now because there was an unusually high increase during the past few years. Household formation really outpaced expectations in the past few years. So if we've had these last 2-3 years where it was really high, does that mean that we're going to have a few years of very low household formation going forward? That's one of the questions that it kind of poses. And figuring out the reasons behind this increase in household formation is going to be key to determining the strength of housing demand in the years to come. That's kind of what this report sets out to do. To get into specifics, which I thought was kind of funny, and in 2018, the same outfit, the Harvard Joint Center for Housing Studies, predicted that our average household growth in the next 10 years, so from 2018 to 2028, they predicted the average household growth would be 1.2 million each year on average. They were not right.
No.
Even the 2017 to 2019 pre-pandemic average ended up around 1.4 million annual growth. And the numbers for 2019 to 2021, way above the 1.2 million prediction, from about 2 to 2.3 million household growth is what was recorded.
I mean, so that's like almost double.
Yeah, pretty much.
I mean, that's a big miss.
Yeah.
So I guess begs the question, why should we go off of their predictions going forward? Other than they're one of the most respected groups that studies this type.
I think.
Stuff.
I think
it's hard to predict what everyone's going to do.
You know what I like? I like this report because it's like, we made this mess and we're going to clean up after ourselves.
Yeah.
And so, who better to figure out why? And maybe they'll put their asterisks there. But I like that at least that they're coming forward. And that's why I like. I said this a couple weeks ago. I like it when people go on the record and make these rent growth, because what are the stakes?
Well, and just for context, reading a piece and looking over a piece from Harvard, the Joint Center for Housing Studies, versus some of our other sources, which we have to go. What are the motivations? Even if they try to take those biases out. But so many of these other sources for real estate information are coming from organizations that are trying to sell something, often trying to sell real estate and get you to buy and invest into real estate. So they have a motivation and a goal of saying, hey, it's a great time to invest, where Harvard Joint Center for Housing Studies, they don't have really a dog in the fight, other than I think they'd like to do some good academic work.
Yeah, I agree, and I think that definitely kind of clarifies things, and also I'd like to think that Harvard has some resources to figure out.
They've got a good reputation. I don't know.
They got strike one, and let's see how they do now. Yeah. So they did look at why. Why did household formation surge ahead of these expectations? It's not a huge surprise that millennials were the age group with the largest growth in household formation. So part of finding out that why has to do with that specific generation. And so here come the first two reasons behind the increased household formation, and I'm kind of grouping them together as one. They say economic factors like 4.9% wage growth in 2021 and an unemployment rate that dropped from 6.7 to 3.9 in 2021 made an environment that was that helped foster and cultivate this greater household formation. And another one, between 2016 and 2021, the amount of household growth in the 25 to 34 cohort and the 35 to 44 cohort was about double what it was in the previous 5 years. So a lot of this household formation, they're kind of talking about that millennial group. And it says such a pickup in growth in this age group cannot be explained by growth in the underlying population alone, and suggests older millennials were now forming the households that had been delayed earlier in the decade. And so that's kind of reason number two. Years of...
So going back to the great financial crisis and can't keep staying at our parents' house and you know, trying to figure things out.
So they call it years of pent-up demand for new households, which was unlocked, again, by the favorable wage and employment situation. I do think so. And this is where I will kind of lightly criticize as much as I can.
Yeah.
The pent-up demand factor is interesting, but I wonder, like, when they were making this 2018 prediction that underestimated household growth, how much were they aware of this pent-up demand? Because they're citing it as this powerful driver in their new analysis. What were they thinking about it in 2018?
Now they're like taking it into account and essentially saying, you know, we've kind of maybe carried some of the we carried forward the demand, I guess, from that was pent up, and maybe we're stealing some demand from the future as well.
Yeah, I think that's definitely some the big implication of this entire report for sure. So we've got those two,
but it seems like that is the area where they may have they've like kind of missed. I mean, but how do you analyze you know, pent up demand? I guess you could look at, you know, the population that has not formed a household, and you know what the difference is, and you know the probabilities over time of what they should, and that gap. But it's still that's when those decisions are actually made. That's hard to predict.
Yeah, and again, they're saying maybe this pent-up demand would have been locked away forever if it weren't for the economic conditions being right for you know this change in household formation. So ultimately it does kind of precipitate to the economic conditions. So we've got the economic conditions, that years of pent-up demand. Those are the first two reasons. And then reason 3 is increased headship rates. This is actually increased household formation that is not due to population growth, but due to increases in heads of households. So these are situations like that grunge band I mentioned earlier. People who were previously roommates now are renting or buying their own respective homes. So roommates are breaking up and they're all getting their own places.
Yeah.
And, you know, maybe it's an influencer house where they decide that this is a horrible environment. We're going to all live separately. But that's
definitely now. Yeah.
That's a little more relevant.
Now, are they moving back in with their parents or?
That's true. Yeah. Yeah.
And then I guess if a couple got divorced, you know, they go from one household to two households.
And maybe all those influencers are accountants now. That's a lot more. I'd love that for them.
They are saying they are accountants. That's what they're telling their parents.
All right. Oh yeah, that's true. But yeah, the fact that so much of the increase in household formation came from increased headship rates suggests, as they write, that the current surge in household growth is temporary because we're reaching the foreseeable peak of headship rate right now. Like I said, all those roommates, they've already gone and gotten their own places. Maybe there's not enough roommate situations to break up and increase the heads of household rate. Now, given that the other driver of household formation, population growth, is very low compared to historical averages, then as the JCHS argues, we could be seeing lower housing demand, such that, as they say, the impact on markets could be significant. I'm going to offer another gentle redirection that may steer markets away from such a significant impact. The report says that we have no more room for increased headship rates, that all of the roommates, they're all gone.
Yeah.
But I think that there's actually still some room left. JCHA says that we've recovered a great deal from the post-2008 housing slump, and headship rates now, so these roommate situations, were about where we were in 2011.
Okay.
But in 2006, which is pre-housing crisis, the headship rates actually look better than 2011. So if we set 2006 as a peak instead of 2011, we're a little bit halfway past the point of this kind of roommates getting their own places. So we've got some room to go. We have some room for housing demand to go up. We're not really at the peak of anything right now. The story's not over.
There's still more roommates living together. People still living in the basement.
Yeah, exactly. Collectively, that's
right.
And then they say, you know, the other idea is population growth, and that's what's driving it. But this report specifically really covers that idea of headship rates, of household formations due to people getting a better job and realizing, like, I can support myself now. I can live in my own place. And I think that a lot of this depends on economic conditions. If things get bad, and we've said this before, if things get bad, they're going right back into the roommate situation.
Yeah.
So I still think, you know, based on, you know, what we have discussed, the story is definitely not written. We may see in 5-10 years the effects of this all play out. Maybe we squeeze everything perfectly, but we're not going to crash immediately.
So what my takeaway from this is that I think there's reason to be cautious of where household formation is going in housing demand over the next couple of years or so, but with an asterisk next to it saying there's a definite chance of kind of an upside surprise, and they've kind of missed on some of these predictions and been overly conservative in the past.
Yeah, that's actually a really good point.
And that could be the case. I don't think you'd want to bank on that. You don't want to bank on them being wrong.
Yeah.
So like here's the data, and sure, yeah, that could happen. But I don't think that the story is like written in stone, as it never is.
Yeah, yeah, and like I don't want to bet against Harvard. They're usually right.
I don't know. Maybe
When I was saying this, I was
going
like,
off that reputation.
I'm going to give a
long.
gentle redirection. I'm not going to tell them that they're the Harvard elite or anything, but maybe.
I mean, they kind of, yeah.